Welcome back. Well, the equity market has been more or less flat. Let's look at cues coming in from the commodity space. Manisha is joining in with the latest. Over to you, Manisha.
Thank you for that, Subhi. Well, commodities are buzzing, and it's not just the crude oil prices that gained up by 3% overnight. It has been the case with the cross metals as well. But I want to put focus on the ferrous metals, steel and iron ore, that is, because we are trading at multi-month highs into both of these. Well, we have seen gains on improving macroeconomic backdrop is the reason you're looking at steel prices holding firm, and we are trading at a 4-month highs at this point in time. Also, when you look at the prices itself, on a week-on-week basis, the Chinese steel prices have gained up by 3%. For the month of July, we are up by 9%. But it is the U.S. steel prices which seem to be outperforming, and that is because you have a 50% tariff on import of steel within U.S. and is the reason you've seen U.S. steel prices gain up by 20% in this year until now. Well, apart from U.S. steel tariffs, it also has to do with China, which really seems to be pushing quite a mite. The policymakers are looking to reform the industrial policy that has been supportive. China is looking to erase overcapacity in construction inputs especially. And then China crude steel production, when you look at for the month of June, also has seen a decline. That seems to be supporting prices. Bao Steel also says that they're expecting national output to decline by 50 million tons for 2025. So everywhere that you look, whether it's about cutting capacity to declining steel production, the month of May and then June also has seen a decline. And then guidance coming in for 2025 also has been on the weaker side. China also looking at that immense spent on the hydroelectric dam is also expected to lead to metal prices and metal demand gaining, and that has been supportive too. And then it's also about iron ore prices, which also are trading at around 4-month highs. Interesting statement coming in from Chinese Premier Xi Jinping, who's criticized local governments for concentrating investment in AIs, EVs and computing power and losing it all when it comes to infrastructure, construction, housing and real estate. And that is where the problem really seems to be coming in from. Apart from that, it was also about the Politburo meeting, which is underway right now. And some statement from China could really be supportive. And markets also are looking at the US and China trade talks, where we are hearing reading statements on how there could be a more longer breakthrough there. Markets are expecting China's stimulus measures to come in, and that really could be supportive. If you look at the iron ore prices for the month of July, then we've seen the Chinese prices gain up by 13%, while the US markets are up 5% as well. So ferrous, non-ferrous, all of those metals really surging, and the month of July has been quite positive.
Absolutely, and hopes ground that trade negotiations will turn out favorable between US and China. Thanks for that, Manisha.